We are probably on the precipice of a brand new relationship with the Chinese. I would say the relationship between these two great powers is probably as poor today as it's been since Nixon and Kissinger opened up this relationship, not just at the level of government to government, but business to business. And could we be at the beginning of a 10 or 20-year Cold War that has huge implications for the economy, huge implications for the Treasury market?
How's it going to plan out? I mean, could we? I can't imagine that down the road it doesn't become some type of mutually beneficial arrangement, or am I just too much of am I looking at things too positively? An eternal optimist.
Well,
Pollyanna. Yeah.
I'm an optimist, but I would say in 1914 the global economy was reasonably integrated. Trade and the rest were integrated. It wasn't that integrated again until 1980. The last 30 years, we've been living and breathing globalization as if it's an inevitable force. But my judgment is we now have the Chinese and the U.S., which are the two great powers that need to reestablish a great power relationship. And great power relationships aren't about how many soybeans are you going to buy, how many Boeing airplanes are you going to buy. It's about what are your core interests, and I think that relationship.
Core interests and strengths, though. A comparative advantage will win out, won't it? And eventually, don't things flow downhill to where things are done where it's the least amount of capital is required, and we all benefit from that eventually?
An integrated global economy, integrated global supply chains would be good for all of us. But as we just heard in the stories you've reported about tensions, government to government, spying on both sides, 5 or 10 years from now, we might see two poles. A Chinese-centric world and an American-centric world, and the economies and countries will have to plug into one or both.
You mentioned the Treasury market relating to this. I've said several times, and people have shot me down, my worry that one day the Chinese, as part of this trade war, to prove their mettle, will not show up at a Treasury auction.
They've stopped buying already.
What did you say?
They've already stopped buying.
No, but they can actually then also sell. They can dump into this. Now, it's painful for them, but it could actually really create a true problem. I know this is why I said I get shot down. Where do you land on this?
So in the old days, the buyers of the Treasury market were private buyers that looked at price. Since 10 years ago, the biggest buyers in the Treasury market are central banks and governments that have their own interests. That's what makes the volatility in the Treasury market, the move up in yields, quite interesting. If we found out that the Chinese were not going to participate in the next issuance, and the world were to come to that view, that's different than PIMCO sitting out an issuance. That's a bigger, deeper thing. We're going to buy them domestically.
We have to self-fund it anyway now.
Well, I think this is among the places where if two great powers were to have a fight, it might first be over soybeans, but it can escalate.
You remember when people would put money into something where they get actually less money back just because they'd get their money back. Where the Chinese
return of capital.
Yeah, return of capital. They didn't even care if they got interest. They just wanted to park it somewhere where they know it would be there. Where are the Chinese going to go then?
So they have other options today that they wouldn't have had a decade ago. The European risk-free rates, German risk-free rates. I would just suggest that there are economic actors and there are political actors, and in the bond market, we need to think about them differently.
Because they may do something that is counter to their own interests if they think it's going to advance their political interests.
They know that if they were to make public that they were not participating in markets, yields would go up, they would suffer large capital losses. But this is a fight not over the next day or the week. This is a broader fight. And again, I suspect that there will need to be, between President Xi and President Trump, a great summit among great powers, and that requires two countries that want to have that discussion.
What's a risk-free European asset yielding?
So a lot less than U.S. Treasuries. German yields, which are the closest European equivalent.
So how do they competitively go into that versus us?
Well, again, if it were about pure economics, it would be one thing. But if it's about something else, it's a different scenario.
Sooner or later, it's about pure economics for everybody. It seems like it's the economy stupid. We've all heard that. I'm not calling you stupid because you're very smart. But sooner or later, it just seems like money talks and you know what walks.
Well, sooner or later, but we might be in the sooner camp right now. Moreover, I'd just make one last point. The Federal Reserve has pursued the quantitative tightening that's been much written about. The balance sheet is shrinking to the tune of about $50 billion per month. When yields spiked some time ago, the reporters called that the tantrum, the taper tantrum. I wouldn't mistake this for a tantrum, and my own judgment is that the central bank should not, here in the United States, overreact to this news. But I will tell you, if yields continue to move up, my guess would be we will find the Federal Reserve decides to stop its quantitative tightening regime and end up with a balance sheet that's around $3.5 trillion.
So you think this really is a Cold War that's being started here?
I think we're at the risk of a real Cold War, and the Cold War runs in both directions, both in the Chinese domestically and the U.S. I don't think this is about President Trump. I think whoever is sitting in that seat will have a new relationship with China.